Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the new trading week. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour, we did manage to get above this resistance area. We got one close above there, one close on the 4-hour, and then we have been subsequently rejected. Obviously this has been weekend price action, so we do kind of know we get a bit of a reversion to the mean usually for the weekend. If we get a dump, we will then at least come back to where we started the weekend, or if we get a pump, we come back to roughly where we started the weekend, which is what's happened at the moment. So we need to see now whether obviously we come down and take out this low here at 28,500. If we do, then we are probably looking at another swipe of these lows, and then ultimately maybe we come lower, or obviously on the flip side, get back above this resistance, get back above these highs, and then yeah, we can probably establish price within this range here between this resistance and this support. So potential targets up there up to 33,000. Well, then we have to see, can we get above that, or do we get rejected and come back down and ultimately take out this resistance again, this support again. I mean, you can see this wouldn't look too dissimilar to a bear flag. So ultimately, a bear flag off the back of a move down is going to potentially precipitate a bearish move down. But yeah, we have come quite far. Ultimately, the bottoms always do look very bearish. The trend is obviously your friend until the end, but when you do get to the end of the trend, it still looks very bearish. But yeah, that's just a little bit of hopium thrown in there. Let's have a look at our main driver here, the S&P futures here. These are open now, obviously. So yeah, we did get above this resistance area again, and are currently back testing into it. So if we lose this, and then yeah, we're back into this range. Ultimately 3,700 is a clear target, or if we can hold it, then obviously getting above this resistance would be very important. Getting above this resistance would be particularly good. Obviously you can see it marks these lows here, and yeah, getting above there, we could then probably see a decent medium term move to the upside, maybe even as high as this 4,500 level if we are still to roll over. But then you never know, we could continue up and away. What I do want to show you guys though is when you have a such a nice uptrend and you start to get some real technical damage on the chart like we're having here. I know obviously we got this move down here, but obviously we know what that was about. You could call it a black swan, you could call it a bit of craziness, but either way, the central banks had an ammunition in inverted commas to use. Maybe in hindsight they shouldn't and didn't have it, but they did use it and they did have it. So yeah, then you can see what happened there. But when you do actual real technical damage to a chart like this, if we want to have a look at something where real technical damage like that has happened, and yeah, this is the ARK Innovation ETF. You can see you get the real technical damage, and then yeah, there you go. You get a very aggressive continuous move down. Looking at this though, have we reached a level where this is basically at what you could in inverted commas call fair value? We have certainly reached a level on the chart where we'd expect a decent bounce, but yeah, we'll have to see how that moves out. But realistically, all I'm really kind of showing you is when you do put in proper damage like this. I mean, this was obviously the move for the lockdowns, and then the breakout of that move. But yeah, once we started to actually have a proper destruction of the uptrend, then that is the extent of the move that happened, and that is clearly way more aggressive than what you can see we've had here. Obviously the full retrace for this would take us down to well, yeah, around 3,200 on the S&P. So yeah, that is clearly on the cards. Medium term, not saying we're going to come straight down there now, but yeah, we'll have to see what happens. Dollar index, we'll just go back over to the 4-hour. Dollar index still very strong, putting the squeeze on global liquidity. Always global liquidity putting the squeeze on the dollar index. Obviously that is realistically what's happening. You can see yeah, we are going up pretty nicely there if you are a dollar bull. And also if you do want to look at what Jim Rickards says, is obviously if you're looking at dollar currency pairs, dollar baskets, even trade weighted dollars, whatever you're looking at, you are kind of looking at currency against currency, and it's kind of like arguing who has the nicest cabin on the Titanic. So as Jim Rickards would say, but yeah, if you want a true measure of the strength of the dollar, you just look at it against gold, because gold is more of a real thing, a real currency. It's more of a real currency to compare the dollar against. It isn't obviously a fiat currency, and as you can see, gold getting whacked, indicating that yes, the dollar is in fact getting stronger against actual real things such as gold. So yeah, not looking ideal there. And this is the clearest sign ever you'll see of obviously of tightening liquidity in the global economy, and ultimately that will lead to a crash in markets if obviously something isn't done, which I am sure the central bankers of this world will be acutely aware. And I guess it is. They're just playing the game of chicken at the moment. With can we basically cause enough doom and gloom and enough restriction of spending to bring in inflation before we literally get a stock market crash? And yeah, that is basically their game. They are fully reactive to what is going on. So yeah, oil pushing up as well. Could draw a channel in here, potential channel. You can see a rising channel. We do obviously know the statistical outcome of a rising channel. So we'll just bang this in real quick. So obviously if we break that, I mean, to be honest, I guess the real important part of this is the downside. The downside trend line, but yeah, we'll draw the upside trend line as well. I don't well, maybe it's just my bias, but I do struggle to see at present that we break above this, because like I said, the bigger concerns are obviously stock market crashes and recessions at the moment, and that is not necessarily, whilst oil may still be able to stay elevated and clearly elevated to previous levels, I refuse to believe it will continue upwards in that scenario. In actual like nominal value, as opposed to actual people's real world spending power value, which clearly it will still be elevated. What else do we want to look at? The 10-year yield still sub 3%, has its put in a high. I mean, realistically, take out this low, and then yeah, we will be looking at lookout below. I believe that would, once that does happen, if that does happen, then yeah, I think basically the main talking point will be obviously the impending recession that we probably are even in at that point. I mean, let's face it, we're probably in a recession already. I mean, what is a recession? It's 2 consecutive quarters of negative growth. We've had one. Basically, you can argue we had 2 because the previous one was actually only positive because of the build-up of inventories. So we have basically had 2 negative quarters in reality. If you X out that, and then very likely we're going to have another one anyway, which would be the second actual one, if not the actual third one in reality. So what else do we want to look at? What other doom and gloom do you want to look at here? Ethereum Satoshi pairing still holding on down here. This is going to be the one. I think the Ethereum Satoshi pairing is going to do pretty well. Is holding up very well even in the face of what's going on anyway. But yeah, obviously the merge I think is hyper bullish for Ethereum, even if it is only relative to other cryptos. Even if we are in a prolonged bear market and these actual dollar values get whacked, Ethereum is going to start to become pretty interesting. The L2s, the reduced fees, everything moving to L2s, the L2 tokens come in. Yeah, and obviously the merge and all that supply shock that there will be, or the staking, all that fun stuff. Especially if we are in a bear market and these prices are low, and then the merge comes around. It's not like we're at 4,500, 5,000, 6,000 people are thinking, well, it's so high. Do I want to do it? If we do come lower in the dollar value, and then we start, obviously we start to get the merge high, it would be very interesting levels for people to actually start FOMOing into. Well, start say FOMOing kind of indicates that we're elevated prices, but yeah, to start actually buying into at relatively depressed prices. So yeah, we could see a good hold up in that price there, even with a not so ideal macroeconomic backdrop. So yes, let's look at stochastics. I'm sure the short time frames potentially getting a bit tired. As you can see, 4 hour turning down here. The 8 hour not turned down yet, still pointing up. 10 hour pointing up, but as you can see, losing a bit of momentum and possibly coming into a trend line there as well. 12 hour looking to lose momentum and turn down here also. Daily even losing momentum a bit at this low level here. Buy daily has turned back down. 3 day though, turn up from a low level. 5 day still coming down. Weekly still coming down. Bi-weekly still basically down realistically, and monthly down. So yeah, along with the technical damage to the chart, stochastics are not looking ideal. So we all know there's clearly downside pressure on this asset and markets in general. We could easily be seeing lower. We've got to basically put in the work, grind higher, hold higher, turn some of these around, tire out that downward momentum, and then ultimately turn it back up. You don't often V-bottom out of things anyway. So if we do just bounce around, trade sideways, even if we come down and test into this next 22,000 support, and still bounce around for the next few weeks, maybe even a couple of months or so, I mean, that may be our best shout obviously, to then continue onwards and upwards ultimately. But yeah, we'll have to see what happens. Obviously, we're on Fed watch, we're on recession watch, we're on inflation watch, we're on well, just the direction of the stock market watch. There's lots of bearishness going on. Oh yeah, we're on global conflict watch as well. All sorts of crazy things. We are living in interesting times. Those olden days when the S&P would just be making, and tech stocks would just be making new highs after new highs after new highs. Those were the days, weren't they? So yeah, that all being said, remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.